Looking to snap a 4-day win streak. Here to share how he is positioning right now is Kevin Simpson, CIO and founder of Capital Wealth Planning. It's good to have you here. So what's your first take on the price action within this market today?
I think it's a great day for trade school, Scott, because it really is an exemplification of why we need to hedge when we see these stocks, these momentum names really taking off. I mean, any given stock can move higher until it can't. And some of the trades that I hope we get to highlight today are how we've hedged some of the growth names in advance and ahead of this little sell-off we're seeing today.
Well, go ahead. Let's do that.
Yeah, well, we started our new growth strategy, the QDevo, and previously when you and I would talk about option trading, it would always be 30 days or less on a dividend company. In the growth strategy, you can have a whole lot more fun. There's tremendous price fluctuations, lots of volatility. With that comes a lot more risk. But when you're selling calls and you're generating premium, it's a lot of fun to bring in a lot of cash flow. So the first trade that I'll bring you is on what now is strategy, but micro strategy when we started it. We initiated this position in early November, got in the stock around $350 a share, and then into Thanksgiving, it ran to about 400. There was enthusiasm on Bitcoin. There was enthusiasm certainly on leverage Bitcoin with micro strategy, lots of volatility. We wrote a LEAP, a long-term option. And the acronym is Long-Term Equity Anticipation Securities, which is a fancy way of just saying options that expire in excess of 1 year. So we went out to January of 2026 with a $700 strike price. So literally, we could double the share price, and we brought in $160 on the call, like unbelievable. So over the past few months, time has decayed. The stocks have come down a little bit. Bitcoin's come down. So the stock's trading in the 320s this week. And we took the opportunity to buy that call back, and we literally netted $126 profit when we closed out that position. And on a $350 stock, it brings our cost basis now down to $224. So we're up about $100 on MicroStrategy, even though it's pulled down, and we can continue to write calls against it for the rest of the year. So important day to think about really good hedging strategies. The second one I want to cover, which is important today, is Robinhood. You and I talk about this. We talk about it a lot on the halftime report. We love the stock, but look what's happening here. Lots of volatility heading into earnings, implied vol. We wrote a LEAP, a 1-year call for a $65 strike and brought in $13. Now that gives us up to $78 of potential appreciation, which would be like a double round trip if it played out to fruition. But we expect that with any air pocket, we'll be able to buy this back. Hopefully it'll be a similar trade to what we did with MicroStrategy. And the lesson is, you can love a stock all you want, but when they go nuclear, it's not a bad idea to take a hedge.
Yeah, I mean, you talk about air pockets. I don't know if this is the beginning of a bigger air pocket for the momentum stocks that we've been talking about so much on the way up. What's your gut tell you when you see a rollover in some of these names like you are today? For some more dramatic than others, obviously.
Yeah, my gut tells me, Scott, that it's probably not over. You look at some of these names and you can take your pick along the spectrum of momentum, and they're up 40, 50, 60, 80%. Robinhood, which we're talking about, we bought it in February, and it's up quite a bit, 40% over the past 2 months. I think it's up 70% over the past 3 months. So this is a name that had made some massive trajectory to the upside. And when you look at this chart, relatively short, you can see how it could come down to 48 or 45. And at that point, you can think about re-entering some of these names. But if you're not in them, I would look at this as an opportunity to kind of get your list together, can start picking away at stocks as they pull down. But after the momentum, after the run, usually you get a pullback and another opportunity. And I think that's what we're starting now. Not a massive rollover, not a sell-off, not the start of the scary bear market, but just a little bit of a breather. That's a normal course of market behavior.